Hey there, Ryan Walmsley, American Pacific Mortgage. Wanted to catch you up on what's happening in the real estate and mortgage markets this week. Today is September 9th, 2022, and we ended last week with the jobs numbers showing that the unemployment rate increased to 3.7%. And then we had the holiday weekend, and then we opened the markets on Tuesday to a lot of volatility in the bond markets, and interest rates for mortgages went up and down the first couple of days of the week, and actually peaked at around 6.28%, which is the highest since June of this year. But since then they have moderated down and actually closed the week below 6% at 5.97%. And headed into next week, we're actually looking forward to seeing what the inflation data says. All indicators are showing that the inflation data is going to be positive for mortgage rates, and that would mean a negative number or a zero number month over month. Mortgage rates certainly would like that. Inflation is still high, but the Fed is taking steps to deal with that by raising the federal funds rate to slow spending, and then also doing what's called quantitative tightening, where they're no longer purchasing mortgage-backed securities or U.S. Treasuries, which basically they're going to allow the ones that they've already purchased to roll off of their balance sheet, and they're not going to reinvest those funds into new mortgage-backed securities or treasuries. Essentially, that's going to take money out of the economy, which will take dollars out of the economy, which should help bring down inflation. And that, in combination with the federal funds rate being raised, should really start to take hold and get inflation down. And that's really important to mortgage rates, because that's what mostly influences where they're at. So as we start to see inflation come down, we can expect mortgage rates to improve as well. So we'll have to wait and see what the data says, but positive signs for mortgage rates headed into the end of the year. Now, as far as housing is concerned, prices are up, inventories are up, and home prices are kind of moderating right now. Sales are slower than they have been, and that is going to slow the appreciation rate, but the data is suggesting that appreciation is still pretty strong. However, it is lagging data that we get on appreciation. Case-Shiller is the gold standard of appreciation reports, and the data that they provide, it was from June of this year, and it was showing 18% year over year. So although appreciation may be slowing, home prices aren't dropping. It could happen, but at this point in time, we don't have enough data to really know exactly what's going to happen. A lot of experts are expecting that the appreciation rate is going to level out and probably end up somewhere around the historic average, which is right around 4% year over year. That would be very positive for homeowners. We don't want to see necessarily drops in home prices. As a homeowner, you want to make sure that your equity is protected and you're gaining year over year, and that's what is expected. We'll have to wait and see if the slowdown in the markets does turn the markets negative, but we'll have to wait and see, and we'll follow up when we know more about that. Now, this Sunday is actually September 11th, 21 years since that tragic day. And if you're looking to honor those who lost their lives that day, there is a healing field at Tempe Town Lake this weekend, and there's thousands of flags there to represent the people that did lose their lives. If you have a chance to get out there, I hope to see you there. It's going to be a beautiful tribute to them. And also, we want to recognize those who gave the ultimate sacrifice, protecting our way of life as well. And that can all be done right there in Tempe. So that's it for me, folks. I will follow up with another update. And if you have any questions, feel free to reach out to me anytime. My number is 602-799-8625. Ryan Walmsley, I'm here to serve. Take care.